Welcome to Markets Now. I'm Michelle Rook along with Darren Frywater Street Solutions, and we closed out the week mixed in both grain and livestock futures trade. Darren, let's talk about grains first of all. Corn and wheat, a bit of a setback, and certainly the dollar was a big factor again today, wasn't it?
Yeah, the dollar was up a little bit. I expect that we're going to see another move lower here to complete the sequence. I'm not bearish the dollar, but I think it was time for that market to take a break. It was pretty overcrowded to the upside, and I think what we're seeing is just a wave up here in the correction, and now we'll move lower as we get into this next week. So I think the trading, with the corn was just caught between wheat and soybeans to finish up the week. And maybe things are a little bit more optimistic as we start this new week.
So corn's kind of held support that we've needed to. Do you anticipate we're going to continue to do that? Because we're at the point we should start seeing harvest pressure taken off, obviously.
Yeah, harvest pressure is going to start to wane here like it has in soybeans. And I do think that we will have an opportunity to maybe get a pop in this corn market. I am bearish longer term, but I just don't know what's going to make the corn market go down with the strong internal basis, domestic demand the way it is, and the fact that we got so much dryness around in the United States as we end our year here and move into winter, but also in Argentina, I don't see any signs of La Nina letting up quite yet, and they have a lot of corn that's going to be pushed to their second planting. So I think that's all supportive. If you throw in what happens with the corridor, if something would happen where it would shut or be less effective, I think that really is supportive both wheat and corn.
And you mentioned wheat dragging corn down in the wheat market. We've had some rains this week in parts of the HRW country and some more in the forecast. So was that kind of another thing that pressured that market?
Yeah, I think so. I really do. And you just have more chart signals pointing lower on wheat and soybeans than you do on corn. So I think soybeans were the surprise, led by meal, and that really helped support the corn because wheat should be turning lower here for a continuation of this move down.
So the meal being higher, though, was that just a function of meal oil spreads that had been unwound because oil had a down day, soybean oil did?
Yeah, I think a lot of that was kind of starting to square up before the end of the month and just taking off some of the profit there. But there is some shortages in China. We've seen the hog market up there. 66% higher than a year ago. They've been really slow in buying beans for their inventories, and I think maybe the meal market's caught a bit over there as well. So it's pretty supportive, I think, here for at least one more run higher.
Yeah, plus this export business that we got this morning, almost 12 million bushels, and we've been seeing kind of some disappointment in the market because we haven't seen more in China sales, haven't we?
Yeah, China's been really reluctant to commit anything to the U.S. There's just so much strain between the two countries. But we know until Brazil comes online, as we see FOB prices rise there, they're going to have to come to the United States. And with the hog margins that they have and the shortages of feed, I think they have no choice. But that window will close here in about 10 weeks, and we need to make the most of it for sure.
So November is going to go into delivery here. So we're going to see January become more the lead month. We've been running up into $14 resistance with November. What are you watching on January for resistance?
Well, I think we can make a run up to that 14.25 to 14.40 area in Jan beans and see how we get there, see how exuberant the market is. If it gets there in a day or two, I wouldn't sell it. If it gets there over the next 2 weeks, I would. So how we get there will matter. But I think we can move up a little bit here, higher on soybeans. And same thing for corn. I just don't see what's going to make us move down a lot until we get closer to the end of the year and know more about Argentina and what that situation is. So I'm looking up in the D's corn, 710, maybe as high as 725, 28. There's a gap area on the chart in that 25 to 28 area. And maybe the market's going to try to go there in a pop.
And I've asked this of a lot of market analysts, and now you included. We're very sideways in these grains. Are we going to continue to coil here?
Well, we have been, and that usually leads to a sizable move one way or the other.
Right.
And it doesn't telegraph which way, but I guess I just don't see how this time of year, going into Thanksgiving, how we drop at 50 cents to the bottom. I think the surprise would be a pop to the top. And that would be allowing people to get more hedges on and get more sales on, as long as they don't turn bullish on that rally. So I'm favoring the upside here as we move into Thanksgiving.
Let's move over to live cattle. New contract highs this week. We had higher cash again, 150, and I believe some 240 in the north. But we ran into chart resistance. So was this just some end of the month profit taking today, you think, or not?
Yeah, I think so. And we have a minor wave correction here down before continuing the uptrend. It was about 3 weeks ago when we made that high and we dropped off both on cattle, but hogs more sharply, that I thought maybe we were putting in tops for the next year, year and a half. And we came roaring right back and I had to reverse that call. And now I'm looking up in the December cattle at 156, 157. We'll have some downs and ups to get there, but I think we want to remain friendly cattle into the end of the year. Same thing for hogs. I think hogs have some more ups in them here before we actually turn this market lower longer term.
Yeah, today though it looked like just some short covering because we had a pretty wicked day yesterday down on D's.
Yeah, that's right. I'm looking up in D's hogs and then for another move lower. So choppy markets, but with an upward bias, I would say.
Okay, thanks so much for joining us. That is Darren Fry with Water Street Solutions.